Okay, so today we're going to look at the forex market calmly and rationally. We're going to do some basic analysis. I'm going to show you the way that I trade. I have to make the video, baby. I love you. I love you. They're waiting on me. Okay, so we're going to go through the chart step by step, and what we're going to do is I'm going to show you the exact way that I trade. And if you're new to my channel here, so this video is for two people. Number one, it's for you if you find yourself getting confused very easily trading forex or any market for that matter. We're going to focus on forex today though. You find yourself getting confused, you find yourself doing way too much and overcomplicating it, and then you get to the point of analysis paralysis where you don't even know what to do. The second thing is a lot of us need to be reminded more than we need to be taught. So if you already know the way that I trade and you already know that I just trade simple bounces of support resistance zones, but you really have trouble duplicating that over and over again because you can't stick to it because you got shiny object syndrome, you're jumping all over the place, this is going to remind you to keep it freaking simple. Okay, so let's go ahead and get straight into it. I'm going to start with a very, very basic overview of my trading approach. And it's going to take me maybe like 30 seconds to explain it starting now. All right, so the market goes up and the market goes down. All it does is it just goes back and forth, and you can't predict which way it's going to go. The market is completely random in terms of the moves going up and down. You can't predict it. All we can do is figure out how to participate in the market with controlled risk. So what we do is we find areas where the market seems to have had nice bounces before in the daily and the weekly time frames. Whenever it gets to those resistance zones we find in the weekly and daily time frames, we sell with a stop loss above and a target below at 1-to-1. And if it gets to a support zone, we buy at support with a stop loss below and a target at 1-to-1 risk reward ratio. Then this is where the trade management comes in. If it starts to go into profit, generally speaking, you hold it all the way to the TP. But if it starts going sideways or against you, you try to get out a little bit earlier than the stop loss. This makes your average win a little bit better than your average. This makes your average win a little bit bigger than your average loss. That's all I do. And I share this live in my Telegram channel. I've been running this for 8 years. It's a free Telegram channel. Okay, so you can click the link in the description of the pinned comment. It is completely free to join, and I just share all my trades, all my analysis, all my P&L. I just show every single thing in here. And I've been running this channel for like the past 8 years. So it's a great resource for you to learn completely for free. And you can see all my analysis, all my trades, all the explanations. Very, very valuable resource. And in my Telegram channel, some of the trades that I've posted for this week that I'm looking to take are here on AUD/USD. So AUD/USD, when we go to the daily chart, you can look, and we'll just start from scratch. We're going to do it very calmly and rationally. We can see that prices bounced up here as resistance a couple times, went higher, and we can also see it bounce maybe here as support, 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 and then where price currently is at right here, we have this region here. Now, price is not perfect, okay? There's generally speaking, there's just zones that you can use where price might bounce at. And again, you can never know, you can never predict it. So some people, what they'll do, and this is what I did for a long time, is you can draw a whole zone to encapsulate that price action. Then what I would normally do is I would set an alert about halfway into the zone just to like be able to get into a trade if price got into that region. What I do now is I get the zone marked up, right? And then I draw a line at the exact area I would want to enter at. And then whenever I draw the line there where I'd want to enter at, I just remove the whole shaded zone. And then I just have an alert sitting here at this line. So basically just, go here, I set the alert. And when price gets there, it tells me like, okay, cool. Like, prices might be ready to bounce there at that zone. So that's all I do. And this is probably a trade I'm going to be taking as soon as this video is over, as well as a potential one that we're going to go through whenever we look through this. So what is the idea here? The idea here is that price is either going to go up or down. Okay, it's that simple. There's no mental gymnastics. There's no pyrotechnics. There's no trying to convince yourself of a bunch of things that are disillusioned. It's just very, very straightforward. Price is going to go up or down at some point. Your goal here is just to make a little bit more when you happen to be right versus what you lose when you happen to be wrong. And all that means is that your winners have to be just a little bit more than your losers on average. I don't like using 1-3, 1-5, 1-10, 1-69 risk to reward ratios just because the losing streaks get so insane that it becomes very difficult for people to duplicate in practice, even if it works. So what I find is better is to just set a 1-to-1 risk reward ratio. With a 1-to-1 risk reward ratio, if you do nothing, half the time it will go to your stop loss and half the time it will go to your profit target because it's 50-50 and you can't predict which way price is going to go. Guess what? If you have a 50% win rate with a 1-to-1 risk reward ratio, roughly long term, given fees and commissions and all the variables between the distribution, the random distribution of wins and losses, you're just going to break even. You can blindfold yourself and enter 1-to-1 risk reward ratios randomly on the chart, and long term, statistically, you are just likely to break even, net of fees and commissions, of course. That's a beautiful system. You know why? Because 95% of people are losing money trading. Whatever it is, 90%, 95%, 99%. Most people are losing money trading. You can break even, meaning you can not lose money trading and be in like the top 5 to 10% of traders by just breaking even, by blindfolding yourself and entering random 1-to-1 risk reward ratios. Okay, cool. That's a great starting point. A trading approach where you know you're at least going to break even and you're probably not going to lose money. Okay. So with that being said, now once you get into this, you can start doing things like this where you enter a buy and let's say you put a stop loss below the zone. It cannot be too close and it doesn't need to be too far either. So right, just far enough below the zone where if you're completely wrong and this falls through the zone, you're going to get stopped out. And then you risk however much you're comfortable risking on the trade. For me, I risk anywhere from $50,000 to $100,000 per trade. And in my results on my P&L, you could see that my losses, you can see how they're relatively small whenever I do lose sets of trades. But whenever I win, my profits are relatively big. I made $209,000 earlier this week on 2 trading opportunities, GBP CAD and GBP AUD, which I covered in yesterday's video here on my channel. And that was after a losing streak of losing like, I think 5 or 6 trades the past week and a half before this. And I lost $150,000 doing that. I made it all back in a day on 2 trades. And one of them only went halfway to the profit target. And I made it all back and more. It's very important to be able to make more than whenever you're winning versus what you lose when you're losing. So with that said, I risk 50 to 100K per trade. You can risk $100 to $200 per trade, whatever it is you want. It's all up to you. So what you do is you use a lot size that's appropriate for the trading opportunity based on where the stop loss is in terms of pips. Then you'll drag your profit target to a 1-to-1 risk reward ratio. And then here's where the magic occurs. If it starts going sideways at the zone, it starts just bouncing, but it's making lower highs into the zone, guess what? You can just get out of that trade because it's not working after a few days, sometimes a week or 2. And if you get out whenever it's going sideways and you get out, say like right here, even after fees and commissions, that's only about maybe 1/4 or 1/3 of the way to the stop loss. Okay. Everything, all things considered. You can get out of a trade and then you can lose it and then you don't lose that much money. It's basically a break-even trade. If it breaks below the zone and closes, right, you'll see how at this zone here, price bounces and then here it bounces and it leaves wicks. If it gets below the zone and closes on the daily, you can account for that context to say, look, if this was going to work easy, it probably would be bouncing here. And so I should probably just get out of the trade because it's not bouncing at the zone. It's breaking below and it's closing below. Oftentimes a good indication of whether or not price is going to bounce at a zone is just to look at the closures. Okay. So whenever price closes below a zone, it looks like it's going to go down. Generally it falls. And whenever, it goes above a zone and it comes back below the zone, it closes below, generally speaking, it's going to fall. Okay. So you can never predict anything, but it's just a way of managing risk in such a way that positions you to make more money when you happen to be right versus what you lose when you happen to be wrong. And in this case, if you close here, it's about halfway to the stop loss, right? So effectively it's a 1-to-2 risk reward ratio. The problem with using static 1-to-2, 1-to-3, 1-to-5, 1-to-10 risk reward ratios is that you are automatically taken out of the trade if it gets to a region where you think it is going to be invalidated at. I don't like doing that because price is not that predictable. It's not that black and white or absolute. It's very dynamic. You have to be able to look at the context. If you buy and price immediately starts going into profit, that's a trade that in most cases should be held, right? So you can use the context. You can adjust for the price action. You can hold it. If you enter a trade and then it starts going sideways and it's not easily going into profit, that's a trade that becomes less likely to move towards your profit target. Why? Because if it was going to move to your profit target, it would have already started going, generally speaking. The best trades are going to be the ones where you enter, they start going into profit, they never look back, they hit your profit target, they were not a pain in the ass. Those are the best trades. Anything that's not that, which is going to be half the trades or more, you just want to get out of. Okay, it's very simple. If it goes sideways or it starts breaking the zone or closes below on the the 4 hour, the daily, the weekly, whatever it is time frame you want to use. I use like the daily for most of my trading decisions, and then I look at weekly, and then I also look at 1 hour for price action context. But really, I could probably do this with just the daily chart, looking at daily candle closures. That's looking 1 time a day for 5 days a week. It takes almost no time. It's very, very simple. So with that said, if it starts going against you, you can close it. You take a small loss. And if it goes into profit, you just hold it to wherever the profit target happens to be at 1-to-1 risk reward ratio. So that's what I'm looking to do here in AUD USD. What will I be doing? So here's a couple things. Last night, price came here into this zone and started bouncing right there, but now it's up above this zone, and I do not enter unless price is at or very close to the actual region where it is I think it will bounce. And so for me, I wouldn't be entering up here. I'd be entering somewhere a little bit closer to the zone down here. Stop loss, probably something like that. Take profit would be at 1-to-1. This is perfectly fair, right? 75 pip stop loss for a 75 pip target. And this is something that, it's also very simple to see what your trading idea is, right? Because you don't have to You don't have to like play all these games and use all these different indicators and technical analysis. It's a horizontal line. That's it. The next trading setup that I'm looking at right here on AUD CAD is I'm looking at buying here at this zone, and I think this is actually a little bit better than AUD USD. It doesn't look like it's going to be coming back to hit that zone, and it almost came there last night, but then we rejected and we just stopped there and then pushed up with this current daily candle. Why am I looking to trade off this zone? Well, let's go look right here. We got this little rectangle thing here. That's the region where prices bounce multiple times. Okay, so 1, 2, 3 is resistance. Broke above, found support once. You might call that twice, but let's just call this one twice. So once, twice, 3 times. And now if we get here to the 4th test of this zone, right, after we've made a new higher high and everything, that would be a fair place to buy. Why? Because not because you think it's going to bounce there, but because it gives you a great way of controlling risk. Now, again, I have just taken a horizontal line and I've drawn it at the actual area I would be looking to actually enter a trade at. And so I've removed the zone, and now I'm just left with this little horizontal line here, while still recognizing it's a zone. And you can't put a stop loss like that, right? You should put it like a far enough distance away from the zone where if you're wrong, it's going to invalidate you. And then if you're right, it's going to bounce and you have a reasonable profit target. Just a 1-to-1 risk reward ratio, right? This can take a day. It can take a couple days, sometimes a week or two, but it's a very simple way to structure it. And you're not trying to shoot for the moon and be a hero and catch like the next 1,000 pip move. It's hard to do that in my experience. So if price gets into this zone, I'll be buying right there, assuming we don't break it immediately. If we get to the zone, start to kind of bounce on the 1 hour with like 1 or 2 candles, I'll be entering a buy, put a stop loss below the zone. Realistically, it'll probably be something like that, and the take profit will be something like this. And then if it goes into profit, I'll hold it, and if it starts going sideways or it breaks the zone, I will close it. Very simple, very straightforward. No stress, no complicated, crazy analysis. And the last one here that I'm looking for is GBP AUD. So again, you can go here, you can take a little shaded rectangle thing, you can take a little zone, you can draw it. You can see prices bounced here in the past. Once a support, broke below, found resistance and bounced there, broke above, came back, found support very briefly before breaking below. Resistance, 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 resistance. And now if we come back in here and again, all I'm saying is that it might bounce there. And if it does, we got a really good way of controlling risk. We've got a great way of structuring our trade. And so the idea would be that, okay, it gets into the zone. We can sell somewhere around the zone, right? We don't want to sell down here because then it screws up the risk structure. But if we sell up here at the zone and we have a stop just past the zone, so something like this, and then a take profit of 1-to-1 risk reward ratio, then this gives us a really great trade from a risk perspective, right? It gives us a great way to structure it. And on this, I'll probably be risking $75,000 to $100,000. And that's what I'm looking for in GBP AUD. What is it? It boils down to just a basic, simple bounce of resistance. That's all. And guess what? You see this zone down here, this weekly zone where price came to this area? I bought right there. I made $50,000 on that trade earlier this week. And I will actually go and show you that because I shared it here on my Telegram channel. So if we go back into the analysis for this week, you could see I had 2 trades. So I had GBP CAD longs right here. And then I had GBP AUD longs where I had bought down here at this zone. And you could see right here where I actually called the trade on my Discord server. The Discord server is where I call the exact trades with the exact entries and everything. So this is a place where the moment I enter a trade, I share it with all the details and all the specifics. The Telegram channel, I share the analysis, I share the recaps, I share the P&L and everything. Here on my Discord server, that's where I share the exact trade in real time. So for example, this is whenever I enter GBP AUD longs. So price came into the zone here. You can see here on the 1 hour and on the daily. So price came here into the zone. I got into this trade. You can see on this one, I risked $100,000 and I had my stop loss there and I had my profit target up there. This is on the, and then whenever we go and look right here, you can see I'm long on GBP AUD, $100,000 risk. Stops and targets in the entry are all shown above because I show my screenshot, my terminal P&L. And then I've included the monthly chart in the terminal just because it's easier for you to view it. But remember, my trading analysis is done mainly on the daily, and I use like the weekly as well for context. And then I use the 1 hour just for price action when price gets to a zone. So this is just a bounce of a weekly daily support zone. So this is what happened the next day. GBP CAD started to bounce, and then GBP AUD started to bounce as well. And you can see it was down there. Well, long story short, what ended up happening is things started to go into profit. At this point, I was in $82,000 of profit at that time, and then it kept moving into profit. And then I closed everything right here in $209,000 of net profit. On that GBP AUD trade alone, it was $100,000 risk. I closed it in $57,000 of profit because of the context. We had a quick move into profit, and it was sitting at a daily resistance zone, and I thought it would be a better idea and less risky to close the trade there. So you can use your dynamic context, whether you're closing trades in profit or loss. However, generally speaking, it's not a great habit to close winning trades early before they take profit. It's better to hold them. And just to kind of make my point here, even though I'm happy with my decision to exit GBP AUD, because I was so happy to be out of the trade, it was a quick profit in one daily candle, and I thought there was going to be a retrace. That didn't happen. It would have gone to the final target. I would have made $100,000 on this trade. I missed out on $43,000 of extra profit that I could have made had I held it. That's why it's generally a bad decision to close winning trades early. However, right here with GBP CAD, these were basically at the profit target, and so I closed GBP CAD at the profit target. It was about $150,000 of profit. And here it was right here. It's GBP AUD. Here's GBP CAD. So you can see it's here on the weekly chart. You can see I just bought there at the support level where price was bouncing over and over. I put a stop loss below the zone and the target and went up here to the TP. And then I closed the trade right there. And this resulted in a nice big profit. My account got to $800,000. Now check it out, a $209,000 winner. The very next day, I take this AUD USD trade, which was buying at the support. Then what happened is price started breaking below the support zone. And once it started to break below the support zone, I liquidated my positions here. And look at how much I lost. I gave back $32K. My last winning trade on GBP CAD, I made $150,000. My partial winner on GBP AUD, I made $57,000. I lost $32K on this. I was risking about $100,000 on it total. And so I gave roughly 1/3 of what the stop loss was. That's how far I closed it, right? I lost $32K. The stop loss was at $100K. So it was about 1/3 of the way to the stop loss that I closed it. And the risk remains. I started this account in October of, I think it's like September, October of last year or something like that. October 2025. We currently sit here in May of 2026. And I've called every single trade on this account live. I've more than doubled the account in that time period, even after paying almost $170,000 in swap fees. I made $578,000 in profit. Again, every single trade, every single detail. It's all here in the trade history here in this server, in my Discord server. Every single trade was called live, and I've grown the account $578,000 profit, or effectively after fees and commissions, I've grown it from $350K to $760K, right? So it's more than doubled the account in this time period, which has been about 7 months. That is the beauty of this. And what I'm trying to do, I'm trying to get this account to $1 million by the end of the year. So that'll be roughly tripling the account, a little under tripling it. And if I can do it by October, and I'm very close, right? The account's at like 750 grand. If I have 2 or 3 more really nice winning trades, factoring in the losses, the break evens, things like that from losing trades, it might take me another month or 2 to hit this. It could take me another 5-6 months. But even then, being able to double or triple your trading capital in an entire year, that's a beautiful thing. And knowing that every single trade has its own risk structure, knowing like you have a max risk per trade, you're not risking the whole account for every single trade. That's a beautiful thing to do. And it allows you to actually like have some guts to risk higher amounts per trade. Per trade on my account, I risk anywhere from 10 to 15% of the account. So some people might call that very risky. Keep in mind, I've been doing this for a decade. Okay, just over a decade, like 10 years and 2 months. I've been doing this. I've been profitable for the past roughly 8 years. I've made millions of dollars in forex and crypto and stocks. To some degree, I know what the fuck I'm doing. Okay, just to some degree. And trading's given me an amazing, beautiful life. It's allowed me to be able to like have so much free time and be able to make stupid videos like this yelling at you on YouTube. And I love what I do. And because of that, this whole simple trading approach, just basically support resistance over and over and over again, that's enabled me to live this kind of life that I'm living, where I'm able to make these YouTube videos screaming at you to remind you that you don't have to do all this crazy stuff. You don't have to do all these mental gymnastics to try to make money trading. You don't need all these crazy trading strategies with huge risk rewards and trying to self-delude yourself and to believing that the market is run by market makers that do this and that and manipulate price and swing things back and forth. Look, it's a chart with some lines on it that go up and down. Okay, and you profit whenever you buy and it goes up, and you profit whenever you enter a sell and it goes down. All you're trying to do is position yourself in such a way that you happen to make a little more money when you're right versus what you lose when you're wrong. And again, most of you who already follow me, you already know this, but you need to be reminded. You need to be reminded much more than you need to be taught, so that way you remember to keep doing the same thing over and over again. And if you're new to my channel here and you've watched this whole video all the way through, by the way, if you ended up hitting the like button on the video, thank you, I appreciate that. That helps the channel out quite a bit. Gets this video out to more people, so I appreciate that if you did that. But if you're new to my channel here, What I want you to do is I want you to go here, join my free Telegram channel. There's a link in the description and I'll put it in the pinned comment. And I just want you to follow my trading analysis for like a month and watch how much your trading changes. Okay. If you follow my trading analysis for a month and you think it's complete bullshit and you want to go back to trading your super complicated, insane strategy, be my guest. That's perfectly fine. What I'm trying to do is simplify things for you, because most people who are losing money trading are overcomplicating the heck out of everything, and it's not necessary, and it's not functional, and it's not effective, and it doesn't work. I'm uniquely qualified to tell you that, because my content has reached, we've had millions of impressions with my content. I've had hundreds of thousands of people come into my free trading and free Telegram channel. And then on top of that, I've had 4,700 paid clients over the course of the past like 7.5 years that I've been running my business, Mission FX. I'm uniquely qualified to tell you that the main reason most people are losing money trading is because they're not keeping things simple and controlling risk. And all you have to do are the very, very basic things. And again, I've proven this time and time again by live trading in my free Telegram channel with the analysis, calling out the exact specifics of all the entries and trades here in my Discord server. The proof is all there. I've done this for years, over and over and over again. I'm just trying to help you structure it in such a way where you're going to actually make significant progress. And again, if you don't make progress in 1 month, fine. Leave my free Telegram channel, leave my YouTube channel, go try to learn some other shit that you think is going to help you. I'm trying to boil it down to the most rudimentary, basic, fundamental core principles that you need in order to get and stay profitable. Trading is risky and most people lose money. I don't want you to be one of them. Try to simplify your trading. With that being said, I'll see you in the next video. Cheers.